Hello friends, myself Shalabh Hajela. I'm a CA final student from Delhi and I'm pursuing my second year of articleship from Satish Agarwal and Associates. And apart from being a CA final student, I'm also a paper presenter in the CA convention, CA conclaves that are being held by the institute. And recently, like in December 2015, I presented a paper on topic GST, the concept and impact of GST in Bangalore, in South India there. And the response there was really very good. There were around 1600 students and the response was really very overwhelming. And at the time of making the research paper on GST, it was a hard nut to crack. I have to do lots of research and all that. So while I was doing that, it was quite hard. So I guess if any one of you wants to do research on GST or wants to know something about GST, even if you don't have a taxation background, academic taxation background, doesn't matter. This presentation of mine, which I am going to show you just now, will surely help you. This is the presentation which I gave there in Bangalore and it was applauded, it was appreciated, so I guess even you people like it. The topic which I am going to talk is concept and impact of GST. Now, GST is one thing which even if you're not aware of, even if it's full form, right? We must be knowing that it's somewhere in the newspapers, in the media, in the news channels. Arun Jaitley is talking, Narendra Modi is talking, Rahul Gandhi and Sonia Gandhi doesn't want to talk about it. All this rumor, all this buzz is being created about GST. Now, GST, first of all, is goods and service tax. It's a taxation reform to comply all the taxes, all the indirect taxes, that is service tax, excise, VAT, and there are so many various kinds of indirect taxes in India, to comply them into one tax, that is goods and service tax. Now, as you see, the newspapers are full of headlines about GST, and not only from past couple of months, but almost past 1 year has been like GST is coming, or the rate, or the state's disconsent, and many news. Like it was, at one time it felt that it was about to get passed, but still it's in future, it's not yet passed. So as we can see in these slides, there are n number of newspaper clippings and it is like everywhere it's GST. But the thing is that GST is not a 2-year-old concept or a 5-year-old concept, it's a more than a decade-year-old concept, right? While I was interacting with a few of the chartered accountants in the events which I attend, one of the very senior chartered accountant, he told me that in India, GST is expected from 1990s, right? These tax reforms are expected from 1990s. So if the CAs were like this at the time of their prime of youth while waiting for GST, now they are like this. They are still waiting for GST. And while I was researching, I came to know that first time GST was implemented in France in way back 1954. In the year 1954, the first country to implement GST was France. So technically it's not wrong to say that GST is only 6 years younger to our Constitution of India, which passed in 1949, because GST got implemented for the very first time in France in 1954. That's way back. Now the definition of GST, the proposed law which has been proposed from time to time in the parliament, in the Lok Sabha, Rajya Sabha, lower house and all that, the definition of GST which states this: goods and service tax means a tax on supply of goods or services or both, except taxes on supply of alcoholic liquor for human consumption. The alcoholic liquor which is for human consumption is kept out of the context from GST. Other than that, any supply of good or any supply of service or both is under the branch of GST. Now the word uses supply of good. If we read between the lines, this is what it is. The word uses supply and not the sale. So even if the goods are transferred from one state to another state, or it's a branch transfer, or even it's a free supply, anything which includes sale, but more than that, because the word uses supply. Even if the goods are supplied, even then GST will be applicable. And the word use services. Now, for those of you who are from CA final background or who have a good background in service tax, we all know that the service definition which we are using is as per the Finance Act of 1994, which stated a few exemptions to this is and this is not service, this is what service is. But under this, service is defined as anything and everything. So it's up to government to decide what services are. There is no exhaustive list. Everything is service. So technically, to determine what service is, even sky is the limit. Now let's talk about the timeline of GST, like how it how the word of the go started, what was the plan. Now for the very first time in year 2000, that is almost 15 years back from now, Vajpayee government, the Atal Bihari Vajpayee government started discussion on GST, and then the blueprints of GST, that how GST should be, what should be the rate, how it should be implemented, was brought forward by Kelkar committee. And after that, an announcement was made during his budget speech by then Finance Minister Mr. P. Chidambaram that the deadline for implementation of GST would be 1st April 2010. And I guess we all know that this deadline is not met. It's still not met. It's 5 years more than that. And while there were other steps which were also taken way back to make sure that GST is implemented at time, the first step was that the CST rate, that is Central State Tax rate, started reducing from 4% to 3%, which subsequently being reduced to 3% to 2%. So the steps were being taken. The steps were being taken that the GST gets implemented. There were all blueprints, suggestions, the suggestions about rate, how it's need to get implemented. But eventually, GST could not be implemented. And the reason for that was that there was no consensus between central and state about the division of money which will they get as tax or whatever the reason is, but there was no consensus. And this brings me to the fact that in India the relationship of state and central is more like a husband and wife. They know that they have to function all together, they are left together, but they never agree with each other. So that's the biggest reason why GST was not implemented then, and till today it's not being implemented. That's the one big reason. Now Arun Jaitley, the present finance minister, who said around a couple of months back that 1st April 2016 is the date by when GST will be implemented. And as far as now, as we see the recent things which are going, it seems impossible. But even if they say that 1st April 2016 is the date on which GST will be implemented, I hope it's not 1st April but 2nd April, because on 1st April they can claim that we are making April Fool out of you. And this is what they are doing since so many years. Still GST is not implemented, and a few days back I received a notification on the Economic Times app that even Arun Jaitley himself has said that even 1st April 2016 doesn't seem likely that this GST thing will get implemented. So we may have to wait for another fiscal year, and I don't know how many fiscal years more. Now, first we should know that why GST is needed in a country like India. The present structure of taxation in India. Now, India has a federal structure of government. There are 3 taxing authorities. The first is central, the second is state, and the third is municipal corporations, the house tax or the water tax, and that do we pay. So primarily, if we subside that taxation done by communities, the third part, the first 2 parts are central and state. That's the primary way of taxation. So this is how it is. Central government levies their tax, that is Narendra Modi for instance right now, and state government states their tax. For example, if you are living in Delhi, the revenue source for Mr. Arvind Kejriwal. These are 2 primary taxation authorities. And this is how they earn their money. Now governments need money, they need taxes. This is a long history of Lagan and then taxes and then challans. There may be n number of names, but the thing is that government needs revenue to function. And as you can see on this slide, the sources of funds for central government are central excise duty, additional excise duty, SAD, that is special additional duty, service tax, custom duties. This is the part of revenue for central government, that is Mr. Narendra Modi's government earned revenues through these taxes. Whereas on the contrary, State government earns tax through value-added tax, entertainment tax, taxes on advertisement on newspaper, lottery, and excise duty on liquor. Specifically on liquor, excise duty on liquor is under state head, not under central head, and this is how these governments earn their revenue. Now, central state tax is an orphan, and why do I say that? Just read the name, central state tax. Now, this has got two names in it, central and state, both in one tax. Can you, like, before researching for this, I never thought of this in that way, but why do we have two different taxation authorities named in one tax, central as well as state? The reason behind this is very astonishing, that the CST, that central state tax, is levied by central government, but the revenue is sustained by state government. That tax is collected is retained by state government, however the administrative authority or the authority to collect it is with the central. So if in case you are a vendor and you are issuing some CST issues, if you go to central, they are like, we don't keep the revenue, so we can't do anything, it hardly matters to us. When you go to state, they are like, we are not the authorized person, we are not having the administration to deal with it. So CST is basically orphan, no one knows who holds it, who administers it, and that's what things are. Now, Mr. Albert Einstein once said that the hardest thing to understand is income tax, but if he would have been alive by now, seeing those circumstances, he would have said that the hardest thing to understand is Indian indirect taxation system. Now let's talk about different GST models, that is goods and service tax models, which are being implemented around the globe. As I told earlier in my presentation, that GST was first implemented in France, that is way back in 1954. Now after that, many countries have implemented GST by now, and in the countries like New Zealand, Australia, the GST concept is where central, that is the main government, collects the tax of GST and they distribute it to state as per their agreements. This is the model. And whereas in the country like Canada, the model is just reverse of it. There what they do is the state collects the tax and then they give it back to central. They deposit it back to central. This is very rare. Now this type of model which is being followed by Canada, it's like really very rare that the state collects the tax and gives it back to central. So now which kind of model is ideal for India? If we want to check that which kind of model is ideal for India, it is dual GST, because India is such a big country. If we think that states collect tax and dispatch it to central, this is impossible. Actually, it's impossible. Each state have different tax collection, different amount. They rely on different productivity, which gives them taxes. On the contrary, if central will collect every tax, now it depends upon the population of the state, the area of the state, the economic activities of the state, that what amount of that tax should be dispatched to which state. So technically it's very difficult for India to implement one-sided GST model. So therefore the model which is proposed in India is dual GST model, whereby central will levy different GST, that is CGST, central GST, and state will levy another GST, that is state GST, SGST. The expected rates. Now this is the biggest, I would say that the biggest question the common man has. It has nothing to do with the provisions, with the input tax credit and all that. That what is going to be the rate of GST. Now it's still not decided yet. In one of his speech, Mr. Arun Jaitley said that anyway it's going to be less than 26%, and it was a big shocker for the stakeholders since 26% was considered a big rate. Now the rate of GST will be into 2, and like why do I say that? Because GST mind you, GST levied by central is different and GST levied by state is different. They both are going to tax you differently. So if it's, let's say, 10% and you're doing any transaction which comes under the scope of GST, so 10% by central and 10% different by state, that is central GST and state GST. And there's another thing to it, not only CGST, that is central GST, and SGST, that is state GST, there's also a concept of IGST. Now I'll be going to discuss it further. And recently, a panel headed by Mr. Subramaniam suggested that the revenue neutral rate, that is the GST rate, should be somewhere around 15%. And why do they call it revenue neutral rate? Now, if we analyze this RNR of 15%, people, if you must be seeing the Economic Times, there is a constant term being used, revenue neutral rate. Now, what's that? Revenue neutral rate is technically that the amount that government is presently getting as tax doesn't change. The rate should be such that, for instance, if they are getting 100 crores as tax, whatever the rate is, the collection in monetary terms should be same. So the rate of GST should be such that the revenue of central or state government doesn't change at all. Now these are three components of GST, as I have been telling in the presentation. One is CGST, that is central GST, which is a source of revenue for central. The other one is SGST, that is state GST, which is a source of revenue for states. And there is another thing, which is IGST, integrated GST, for interstate movement of goods. For example, if goods move from UP to Delhi, in that case IGST will get implemented. And the concept of CGST, that is the state central tax, and the state tax is quite simple, but IGST is something very interesting. Now let's uncode IGST. If goods or services move from one state to another state, then IGST will be implemented. Now this IGST is like a service tax, since it's a destination based consumption tax. The tax will be collected where goods reach or where services are rendered. And the rate of IGST is proposed to be twice of the rate of CGST. So for instance, if central levies 10% tax, then IGST under GST model will be 20%. And these are proposed amounts, not yet confirmed. And as I told that this is a destination based consumption tax. So if, for instance, if goods move from Uttar Pradesh to Delhi, in that case the tax will be paid to the government of Delhi, since consumption of goods is being done in Delhi. Now why is IGST this integrated intersupply for, this is for intersupply goods of interstate supply of goods and service in the state is a game changer, because under present scenario, what a businessman has to do is to maintain a stock in each state if he has a nationwide approach. And then the biggest issue for the vendors is the input tax credit, the cascading effects. Now if you pay tax to separate government and you don't get credit for that, so it gets added to your cost. And this is why the biggest reason for hair fall and obesity in the businessmen is this cascading effect of tax, because of which they don't get refund. Now the present situation of businessmen is like this, because they need to keep records of taxes paid to separate governments so that they can claim the deduction for that, and this is how it is. But once this IGST comes, a dealer can establish a hub at the state where the goods are produced. So for example, if a particular state is good in producing rice, so a hub can be set there and the goods can be dispatched to any part of the country without worrying about the cascading effect of the tax, since this GST will get benefit of set off. Irrespective of which government you are paying, if you are paying GST, you will get the set off. It will not get added to your cost. So this will be really very cost effective. So this will make the businessman the way he is right now. So it's good that it's get implemented, but we have to wait till it's get implemented. Now ATSG, the move of GST was to supplement different taxes, but even after supplementing it to one, that is GST, they have given it more branches. First was central GST, then came state GST, then came this concept of IGST, which is for interstate supply of goods, and now this is additional tax, which is known as ATSG. This is so confusing. Actually it is. So additional tax on supply of goods is interstate transaction at the rate of 1%. Now the concept behind this is to compensate. And how is that? As I told in the presentation earlier, that if goods move from Uttar Pradesh to Delhi, so GST being a consumption based tax, the revenue will go to Delhi government. Now UP government can say over here, the Uttar Pradesh government, that goods are produced in our state and the revenue is going to Delhi. This is one of the big reasons that states are not happy with GST model. So to compensate them for their revenue loss, this concept of ATSG has been introduced. So if in case the goods and services move from one state to another state, 1% of additional tax will be levied, which will be to compensate the state under which goods are produced. So in our example, if the goods move from UP, that is Uttar Pradesh, to Delhi, the IGST part will go to Delhi since it's a consumption-based tax, but this ATSG will go to Uttar Pradesh government as a compensation for their revenue loss. This is what it is. And CST is a production-based tax, that is, it goes to the state from where the goods are dispatched. Input tax credit. Now, this is one of the biggest reasons why GST is being implemented, because when we pay taxes to separate government, and especially in case of interstate supply of goods, we don't get credit for that. Now, if you have a taxation background, you are definitely aware of this cascading effect. Now, after this, input tax credit will become much easier. As GST and CGST, credit will be available. If you have paid CGST, you will get credit for CGST. If you have paid SGST, you will get credit for that. And IGST, even the input tax credit for IGST can be utilized primarily for the payment of IGST. Then, that is the third point, mind you, if your attention is there, input tax credit can be utilized for the payment, input tax credit of IGST can be utilized for the payment of IGST primarily, then on the secondary step for central GST, and then for state CGST. And no input tax credit. This is the one important point. No input tax credit in entire GST Act is for ATSG. That is the consumption. That is the tax which was paid as a compensation for the revenue loss to the state. There is no input tax credit for that. Now, some points to ponder. Now, revenue from IGST, that is interstate transfer of goods, will go to whom? Will it go entirely to the state, or will it go entirely to the central? Now, there is a rate decided between central and state regarding this. So, if the goods move from one state to another state, IGST is paid on it. So, primarily this IGST will go to central, and now central, as per their contract with different states, will have a different rates, and under which a part of that revenue will go to that state, and the remaining part will stay with central. Now, these states and these rates can be different at different states depending upon the contract with the central. Another point to ponder is this: there are few things which are kept out of the branch of GST, and two of them are tobacco and petroleum. Now, central excise duty, even after GST gets implemented, central excise duty on tobacco and on petroleum will continue to get implemented. They are out of the context of GST. And also petroleum and liquor for human consumption, even after GST gets implemented, states will have power to impose their separate tax on this. So there are primarily three products which can be taxed even after GST, that is petroleum, tobacco, and liquor. And a good way to remember this, there's a mnemonic code to remember these three things, that is Ajay Devgan. Now, how's that? Why is Ajay Devgan a mnemonic code? You will see him endorsing Vimal Pan Masala and Bagpiper on the TV very frequently. So this tobacco and liquor thing can be connected from there, and petroleum you'll have to remember on your own. Now, deemed sales is part of GST. It has been interestingly retained in the GST law. So deemed sales give government right to impose this tax on the transactions which primarily don't seem to be sales but are deemed sales under the section 2, article 366 29A. So this increases the revenue collection for government. Now, information technology network. Now, me being a CA finance student, I need lots of motivation to study ISCA. I really find it very tough to study. So this can be a good motivation for all of us, because a robust network of technology is being created so that GST gets implemented, because a state will have their different revenue model, central will have their different revenue model, and it has to get compiled all together. The input tax credit, and there are many different things. So a group named Tagger, that is created under the leadership of Nandan Nilekani, in year 2010 to execute this. And a company named Goods and Service Tax Network is also being incorporated as a Section 8 company, that is not-for-profit organization company, to set up a IT sector for this GST. Now, as earlier I started, the topic or the theme of this presentation was concept and impact of GST. Now you can find n number of statistics on internet which states that there are good impact of GST, bad impact of GST and so on. But one very simple fact to remember is that it is expected that once GST gets implemented, it will increase the GDP of country by 1 to 2%, and it's a huge amount. Once GST gets implemented, it is expected that the GST of our country will increase by 1%. And while I'm talking about stats and facts, I have a very good stat to share with you, though I don't know whether it's official or not, but I read it somewhere on Google, which states that anywhere in the world, the government which has implemented GST has never been re-elected. So BJP people, though they are very eager to implement GST, but there's a fact going against them that any government who has implemented GST in their respective country hasn't been re-elected after that. Now let us understand this as a movie, this concept of GST as a transaction, as a movie named Taxubali. Now the Taxubali stars very famous Vettappa, Taxubali. Now let's understand their transaction. Now the transaction between them is about a sword. Now Vettappa wants to sell a sword to Taxubali from one state to another state. So this is an interstate movement of goods from one state to another state. As you can see in this slide, this is the interstate supply of goods, so the concept of IGST will also get implemented. Now this is what the purchase that Mr. Vettappa has done for this transaction is, that he has purchased some goods worth rupees 100. The excise was paid at the rate of 10%, that is 10 rupees. The VAT was paid at the rate of 10% again, but since the credit of excise is not available, it gets added to your cost. Now this is what cascading effect is. Now the 10% of VAT is calculated on 110 instead of 100. So this makes VAT 11 rupees, and the total purchase cost in this case is rupees 121. And the sales invoice. Now he purchased it for rupees 100. The value addition done was 10 rupees. Excise paid was 11 rupees. That is the person to whom he is making sale is paying this excise. CST is leviable at the rate of 2%, that is 2.42. Total cost becomes 123.42. Now if he would have got the credit of excise in his purchase invoice, if you can see the purchase invoice, the 10 rupee excise portion, if he could have got the credit for it, the cost would have been less. And this is what the government gets. This is how the mechanism works. The excise of rupees 11 was paid on the sales invoice, but since he has paid 10 rupees in the purchase invoice, that is input tax credit, so he gets input tax credit for that, and net rupees 1 goes to central. So total revenue for central is 11 rupees, 10 which went earlier and 1 which went from the sales transaction. What does state earn over here? Now state earns from VAT and CST. 11 rupees was earned from VAT, which would have been reduced to the extent of input tax credit utilized earlier. Since the example doesn't have that amount, we have assumed it as X. And also in the sales invoice you can see CST of 2.42 rupees. Now that is a revenue for state, but since I have paid VAT to the same government, the input tax credit will be available, and even that gets deducted. Now once these goods move from one state to another state, an entry tax of rupees 3 is leviable. So this even increases cost further. Now the cost for taxable in this case is 126.42, irrespective of when the goods moved from Vettappa, the cost was 123. But since the entry tax gets added and there is no input tax credit available, so this increases the cost even further. And this makes it cascading effect. The cost keeps on increasing since the credit is not available. Now the value added is done at standard 10%. Total value becomes 139 rupees. The VAT of 10% again, and the total is 152.97. If you can see that sales invoice, the total of that is 153 rupees approximately. So doesn't matter how good a king taxable is, he has to sell that sword for 153 rupees. Now this is what the governments are getting from this transaction of VAT of rupees 13.91, and no input tax credit is available because VAT are paid to separate governments instead in this interstate supply of goods. Now GST will resolve this, and how we will see further. Now all these issues, this cascading effect, this increase in cost, maybe have led to this. That's $1 billion answer. It would have led to this because the cost got increased eventually. Now doesn't matter how good a king taxable is, he cannot give it to his people at a cost less than 153 rupees until unless he's a startup, and that too at a promotion spree. Now once this GST gets implemented, how these transactions will be, we'll see in the movie that is taxably the conclusion. And I'll be using the same figures which I used in the earlier example, but because of this GST, let's see how the cost gets affected. The same goods are purchased by Mr. Latappa for rupees 100. Now two taxation authorities comes here, that is central and state. Let's just assume that the rate of GST is 10%. So rupees 10 will go as CGST and rupees 10 will go as SGST, which makes your total to 120 rupees. Now the other invoice, that is when the goods were made out of the purchased goods, Vatappa, when sold this to taxably, the purchase cost was rupees 100, the value addition at the standard rate of 10%. Now IGST was paid. IGST is applicable when goods move from one state to another state. And even in this example, the good is moving from the state of Vatappa to the state of taxably. So this IGST gets implemented at the rate of 20%. That is 20% of rupees 110 rupees. ATSG. Now as I told you, ATSG is a tax which is paid as a compensation to the government where goods are being made. So this is applicable at the rate of 1%, that is 1.1 rupees. So total sales invoice, that is the sales cost for Mr. Taxable is 133 rupees, 133.1, that is approximately 133 rupees. Now look at the sales invoice for Mr. Taxable. Cost is 111. Now since look at the sales invoice at the side of Mr. Vatappa, though the total cost is 133, but the sales invoice of Mr. Taxable has cost of only rupees 111.10. Now why is that? This is what cascading effect is. Since he can get credit for those taxes which he has paid earlier, he will not add them to his cost. Since he can get credit, he will not add them to his cost, and we look further how it is. Now value addition standard rate of 10%, that is 10% of 111 rupees, which makes it 11 rupees. CGST again is paid at the rate of 10%, which makes it 12.22, so is SGST. Now the total becomes 146.55. If you want, you can play the video again and see that the same statistics are used, but still the total cost is reduced by almost 7 rupees, which is a considerable cost if it's just for one good. And let's see which states get what and how this input tax credit is done. Now SGST is paid, let's say, at the rate of 12 rupees, which you can see in the sales invoice. SGST is paid for 12 rupees. Input tax credit can be availed for the same, irrespective that where the movement of goods started from and all that. So the total tax payable will be 2 rupees to SGST, state in the case of SGST, and similar is the case in CGST, that is central GST. 2 rupees will go to them as revenue eventually, because 10 rupees has been paid earlier, which has been reduced as input tax credit. IGST, now it was paid to the central for inter-supply goods. Now since the IGST has not been paid earlier, there will be no input tax credit available. If it would have been paid, if in my example IGST would have been paid earlier as well, the input tax credit would have been available. And as I told you, there is no input tax credit for ATSG ever in anywhere in the GST. There is no input tax credit which is available. So there is no input tax credit available for this. So eventually you can find out that once GST gets implemented, the cost of one product reduced by 7 rupees, that is a substantial amount. Look at the swag. Now as I told you all, I am a CA Finance student, so with this GST thing, what's good for chartered accountants? And this is a generation of startups. We all are aware, we all watch good shows on YouTube, this one being one of them. We all are aware what this startup world is. And why I'm talking about this? Now, it has nothing to do specifically with GST, but the thing is that various research and surveys shows that India has got a huge way for startups. They are growing, and there are a number of more startups which are yet to come. So being a chartered accountant, taxation is a big thing for these new startups. Once GST gets implemented, all these startups will need expertise on this GST thing. So all those chartered accountants and all of the CFN students, including me, can think something really good out of this. And as I'm talking of startups, there's one good fact that there's a startup named bookmybuy.com, which is a Gurgaon-based startup, and you can actually book a bike over there. So if you want, just have a look there. Now, why am I talking this? Because since the concept of startup is now so deep, everything is coming online. Everything is coming online with a startup. So we being a chartered accountant and I being a CFI student can hope for that once GST gets implemented, we can provide our consultancy over the same. And they are not only the consultancy thing, but there are a number of things which a chartered accountant can do once GST gets implemented, that is tracking GST development, tax planning, record keeping, revenue collection. There are a number of things. You can see this in this slide. There are very many things which a chartered accountant can do, provided GST gets implemented. Now the conclusion part. The proposed GST is not ideal GST. We all know that, and you must have known by this, as soon as this video gets end, you will be knowing that this GST is not the ideal GST, but this is the best which can be achieved in present circumstances, provided it gets achieved. It's not yet implemented. So I hope that this goods and service tax becomes a good and sensible tax at least, and we are getting more input tax credit, so the eventual cost of the goods which reach to the customer gets reduced. And since I'm presenting this in January 2016, and there is a very recent attack on Pathankot base which you all might be aware of, so I think we should be very thankful to all those soldiers who gave their lives so that we can live happily. Salute to them. And that's it with the presentation, friends. If you like it, please share it. If you don't like it, there's my email ID. If you have any suggestions, queries, anything to share, that's my Gmail ID and my Facebook ID. Please let me know. Thank you.